Hello, it's the deal bringing you a review of the S&P 500 and US markets in general, going into the week starting 19th of May 2014, trying to bring you a inter-market analysis perspective. Okay then, so let's have a look at the S&P 500. Okay, so like I've explained previously, I've given you a quote there with regards to the markets in general, in terms of summing up fundamentals. Markets initially buoyed by obviously a stimulus or dovish activity from central banks such as the ECB talking interest rate cuts and QE, given the fact that the tapering certainly was being questioned, and given the fact that the BOE was certainly talking down interest rates as well, going into the week ahead. Okay, so basically that's the summation. Overall, we had initial enjoyment or initial hopium. The hopium trade was obviously dictating sentiment until reality struck with regards to weak US retail sales and consumer confidence data, and then we also had the weaker data from the start of the week with regards to China, and obviously the situation in Ukraine and the tension escalating there with regards to the gas payments, etc. So these are all factors at play, all of them at play. Okay, so it's how we juggle them. Okay, it's how we juggle them and how we interpret them. So we had certain strong economic data from the US, and then we've had other economic data that certainly casts it out on the recovery altogether. So what can we do at times when fundamentals are certainly conflicting and potentially confusing? Then we have to go back to our charts and see exactly what our charts are telling us, because that's the psychology of the market, the way in which individuals interpret price action and news flow, or all the news flow that's available at that particular moment in time, and then we can observe the psychology. So if the news flow was certainly obviously giving a bullish sentiment or bullish direction, then we'd certainly make new highs and continue to move higher. Obviously the fact that we've made a new high then obviously reversed quite powerfully itself certainly lacks conviction. Okay, so basically at present what do we have? So on our resistance zones on the S&P 500, obviously a 1900 level is a key one. We've obviously fallen back down to the 1860 level. Now there's a certain possibility or potential now for H&S formation. So watch out for the right shoulder inside bar, provided we remain below the 1890 level. From my perspective, then bears are in control, and we're looking to close this gap here at 1840 region. Okay, so watch out for the 1840 region this week. That's a potential, provided we remain below the 1890 level. Provided there's news flow is bearish and Asia is bearish, then we certainly go south. Okay, so always bear that in mind. Okie dokie, so let's have a look at the rest of the markets. Now generally the S&P is really dictated and led by the IWM, or should we say Russell 2000. So let's just observe the Russell 2000 and see exactly what that's telling us at present. Okay, so daily chart Russell 2000, we are slap bang into the 200 MA, so that's a potential support zone there for the Russell 2000. And realistically there's nothing else I can really dictate and say okay, this is where the market's going to be, other than potentially taking this trend line here and looking at any potential horizontal support. Obviously we've got horizontal support zone in this region here, we have got one here. So basically we're into 200 MA and potential support. Inverted head and shoulders obviously has failed there, so let me just get rid of that now. It's no longer in use. Okay, and that's basically all we can come to conclusion that the Russell is into the 200 MA. That is a potential support zone in the interim. If that fails, obviously then we go south, and then we'll see exactly what the reaction is accordingly. Okay, so let's see if we can get a sign from the Dow. That's generally another one that I observe. Okay, the Dow itself again remains bearish, so it's certainly not looking good for US markets going into the week ahead. Now I've already explained to you I'm going to be shorting the FTSE from the outset with regards to that, and obviously given the fact that the FTSE 100 has a H&S formation, a 60-minute chart as well confirms the fact that the Dow itself has a H&S formation, and obviously that confirms the weakness in the S&P 500 as well. Okay, so that's basically how we're summing that up. Now with regards to the biotechs, this is something from a technology or NASDAQ perspective. You have an inverted head and shoulders in the biotech sector, so again that indicates bullish. Then if you look at our semiconductors, so let's go back to our semiconductors here. There we go. Semiconductors itself has an H&S formation, so this is a very tricky one. So you got left shoulder here, there's your head's gone in, looking for a right shoulder, then down we go. So this certainly isn't looking good, and obviously we've got an inside bar there, or inside day on the day. So this certainly isn't looking good from my perspective. Certainly is not looking good because there are a lot of conflicting signs and as to where this market wants to go. Now, daily chart itself, H&S formation, so inverted head and shoulders will fail. H&S formation plays out and down we go. That supports the FTSE 60 H&S formation and also the Dow as well, and also the S&P. So as you can see, folks, it's not looking good. Not looking good. Obviously, hopium has met reality. Reality is that the economic data doesn't justify tapering, and there really is a big problem with regards to growth and jobs in the US that QE hasn't solved, unfortunately. So what do we do now? Okay, so that's basically what we're observing for now. So 60-minute chart. Let's see if we can see anything there. 60-minute. Obviously, we bounced off that potential support level there. And all we see now is support, and here we go. So we've got support there, we've got support there, and we've got support there. So again, H&S formation, as you can see, is certainly prevalent. H&S formation, that's the one that we focus on for now. 10-minute chart, obviously the market itself. Let's just have a look here. Okie dokie. So yep, the market itself has certainly pushed higher. We're into this gap level here. And really there's nothing else other than that I can observe, other than the fact that we are into horizontal resistance, and then you have 1885 as resistance as well. The moral of the story here is, provided we remain below 1890, then 1840 is next, going into going for the S&P 500 going into this week based on the H&S formation. Okay, folks, so risk on, risk off, wax on.